saying hi to Latrice. I didn't know you were coming to the call, Latrice.
Hi, Ben.
So
Thank you.
It's
Hi.
good to see you on here.
Thanks.
I don't know who you are, Latrice, but I'm going to say hi too. So there we go. Michelle Chambers, how are you? I see you.
You.
Michelle,
Hello,
I
doing
like
good,
it. I
thanks.
like those glasses. Those are good looking glasses.
Thank you.
Okay, so I hear an echo. Do y'all hear it?
Do y'all hear it?
I can hear it.
Yes. Yes, there's an echo.
And it wasn't like that before. Oh, wait, it just went away.
I'm muted and on my headset, so it shouldn't cause an echo.
Okay. It just went away.
I'm not echoing anymore either. Oh, I am.
If you mute all, it'll go away, I think, when you start presenting.
Okay, I have started the recording, and I want to say Happy New Year to everybody. And this is exciting because I just thought it was great. We had a great response, and it is, I believe, a lot of people's New Year's resolution to maybe put themselves in a position of home ownership. So we love this. We love consumers. We love talking about navigating home ownership and the path to owning a home. And this is it's a class that I'll probably be able to get through usually in about, I'm going to say 45 to 55 minutes or whatever. There's plenty of time, like we have the chat, so you can ask questions in the chat. I'm excited also because I have other fellow loan officers that are on the call, and we're still admitting a few people here that are popping in. So I'm excited to have other loan officers on the call that have invited people. And then I'm also equally excited. I know that Anthony will tell you last month we didn't have any realtors that joined the call. And this month I see several. So I appreciate you being on the call, because that, there's a section where I talk about you need a real estate agent, and having your participation and input is great. And again, we had a huge response. I think I think 2023 is going to be a great opportunity for home ownership, especially first-time home ownership, because I think in situations like a year ago or so, I think that first-time home buyers found themselves in a position where they were really trying to compete with a lot of other offers. And I think the realtors will tell you that has subsided. So this is a good time to step in. I will also say, as a native Texan, born in Dallas, Texas, and raised in Texas, that I will say this for certain, is that you can't, 100%, that's 100% of rent is not tax deductible, and it's not getting any prettier. So if you can find a way, and we find you a path, and there's several people, there's even a few people on this call where we've set them up on a plan, and maybe we don't do it this month, but maybe we can do it in 6 months. And there's sometimes things that we can position in such a way to put you in a position to become a homeowner, and have the tax deduction and the interest deduction and all that, looking forward into the future. So anyway, with that said, I want to say hello to all my premier people that have joined the call. I am going to be calling on you, so don't you be running off. And kind of just get started. So navigating home ownership, the path to owning a home. So this is my childhood home in Arlington, Texas. The things that I would tell this child right here, this girl right here, about that tree, and about kissing that boy behind that tree and getting in trouble. I'm telling you, I would probably tell myself that was not a great idea. So I share this picture. This is actually a more recent picture. My house didn't actually look like that when I grew up in it. But my parents, God love my parents, but my parents rented my childhood home for 19 years. So this house that you see here was rented for 19 years. And if you calculate the amount of rent over the course of 19 years, based on today's money, that would be about $496,000 over that time that was spent. And this, like I said, this house is on Westview Terrace in Arlington, Texas. And it was a great, it was a great house. And my parents did the best that they could do for the situation. And my dad wanted my brother and I to attend the same school with the same kids our entire lives. And so And the lady that owned this house, her name was Gladys. And I've never liked that name because I thought that she was not very nice to my dad. And I think that he tried multiple situations and multiple times to work something out where he could purchase the home from her, and they would never work it out. So they went on to rent other things. And after that 19 years, my mom now owns a home in Flower Mound, Texas. And about, God, I think it's about 19 years now. I helped them purchase that. And my mom has been in that house, and we've done a lot of things in the time that when my dad and her got in that house, and we've remodeled it, we've refinanced it. I will tell you this, that if she's known you for more than 5 minutes, she's made sure she wants you to see her granite countertops. So the fact that she has a home is a great thing. It's the only home that they owned in their entire marriage. This is Donald Shriver. He was my grandfather, and he fought in World War II. And I always show this picture because we are very partial to VA loans. We like veteran loans. So if anybody's on here as a veteran, that's definitely the first path of what we want to help you figure out, because VA loans are 100% financed loans. They're very attractive loans, and it's a thank you to their service. And we want to thank our veterans for their service. In the time that I knew my grandfather, I will tell you this, he was a school teacher in Waco, Texas. And as I knew him in Waco, Texas, spending time in his classroom and all that, and all the summers that I would spend in Waco, I don't, what it means for teachers now and what it meant for teachers then. I don't think that my grandfather thought that duck and cover meant what it means today. So I have a huge respect for my teachers. My Rhonda, I see you on here. Huge respect. And this week, getting ready for going back to school on Monday night, getting ready for Tuesday, I posted on Facebook, and I think it posted on my Instagram, but I posted a gift card, $100 worth of Starbucks money just for the teachers. I said, honor, so that, the honor system, so that they could get a cup of coffee. And I checked it today, and there's still money on it. So, those teachers, get yourself some coffee. This is my family out. This is outside of mortgage. Zachary graduated A school in February of last year. And from the Navy. And then this is my daughter, Landry. And man, she looks a lot different than she did last February. She's much taller. So, and then my loan officer husband, Ben Sinclair, who's on the call. So everyone should get a chance to work with their husband. And then, like I said, my daughter, Landry. So that's us outside of mortgage. We always provide a disclaimer. I want to go through a lot of information on this call, but the disclaimer is that as a company, Premier Nationwide Lending, and our parent company, NTFN, we have a lot of relationships. We have relationships with appraisers, with title companies, with realtors. And the disclaimer is that we handle the lending side. So we're responsible for the lending side. We're not always responsible for the people that are outside of that, but we definitely find relationships and work with people that are professional. And we feel like we're connectors. We don't want to refer someone to someone that's not going to take good care of somebody in the process. Again, a little bit about me, just some experience. There's really not any kind of residential loan that I don't know how to do. We were best in Denton County 2021 and 2022. And we like assisted programs. Texas State Affordable Housing Corporation is a program that we like to use. And again, I've talked about veterans and all of it that we just lean into. We really like all the different programs. So let's talk about you. So investing in your future, the discussion topics for today. Should I consider buying a home? Am I able to buy a home? How do I get started? The path from loan application to home ownership. And all of these topics, I think it's always interesting because sometimes people will say, well, should I consider buying a home? Well, you're a lender. Of course, you think I should buy a home. And here's the thing. I'm a big advocate of home ownership. I've already told you my parents rented my childhood home for 19 years. And the only home that they've owned, only home that they ever owned was one home. And my mom's still in that house today. And I'll talk a little bit more about that later. But not everybody is emotionally prepared to be a homeowner. You got to be a good neighbor. You got to, understand the upkeep. There's a lot of things that go into being a homeowner, and you got to be prepared to do it. And sometimes people just are not prepared, and sometimes they don't ever get prepared. So there's nothing wrong with renting, and that's not what the path to home ownership is. The path to home ownership is just making sure that we're conveying that real estate is a good investment long term, and you can tax deduct your property taxes and the interest on your home. So let's kind of jump into this. And as we're going along, when any of the things that I talked about, again, you can ask questions in the chat. There are several loan officers on the call. Philip Price from Lufkin, Texas. I mean, if you can speak East Texas, you can work with you can work with Philip. Anthony's on the call. Denise and Pearland is on the call, and she's got a guest on the call. So we just welcome y'all. Rent versus buy and comparing the cost. So rent versus buy, the cost of renting. This is just kind of the same comparison of what I was talking about. Money spent on renting after 1, 5, 10, and 15 years. You know, there's several people I've talked to in the last several days where their rent is anywhere from $1,500 to $2,500 a month. So if it's $2,000, that's $24,000 in the course of a year. And my different analogies, you have $2,400 a month, $1,800, $1,200, and then the course of time over those years and what that rent actually is. Housing prices are up double digits in most states. So sometimes I get people saying, well, maybe, is this a good time? You know, I mean, I think the realtors on here, Steve DePoe there has had people that, you know, for a while, he's waving now. He's got that Jersey accent, you know, just saying. But even when the rates were low and in like 3.5%, 4%, people were like, is this a good time? Is this a good time? Is this a good time? And now the interest rates are, you know, in the upper sixes, 7.5% in that range. And we're still getting the same question. Is this a good time? Is this a good time? Is this a good time? What about the home values? We're going to wait till the values of homes come down. The values of homes are not going to come down. And the cost of creating them and the cost of building them is not going to get any prettier, you know, but the value. So then people are like, well, wait a minute, maybe my value won't hold. And what I love about this picture is it talks about how we've gone double digits, and it talks specifically about Texas. And we hold our value in Texas. I don't know if y'all noticed, but there's like mass U-Hauls coming from the West into Texas, right? Mass U-Hauls. My cousin's on here. Brian was living in Oregon. He couldn't get to Texas fast enough. You know, it's so they you know, we're going to hold our value because businesses and industry are coming here, because Texas makes it attractive to live for businesses. So don't let that deter you from being a homeowner. Statistically, you got this right off the Federal Housing Finance Agency. Am I eligible to buy a home? So these are factors that we need to consider: credit, down payment, closing cost, and the debt to income analysis, which is what I'm going to cover here in just a second. So when we think about the things that we spend money on, one of the things I tell people about is that miscellaneous money equals to 10,000 every day, just like that. When I analyze bank statements or account, you know, when people have accounts and I analyze checking and savings accounts, what do you think? And for those who might want to answer the question, what do you think is the most miscellaneous money that people spend money on that's hard to account for?
Eating out.
Eating out. Who said that? Robin, good point. Yes. Eating out. Fast food fast food used to be like inexpensive, right? Fast food now is not an inexpensive thing to do. So people spend money, it just flows out of their account on fast food. And if they would, you know, there's times where I've looked at people's account statements and I'm trying to help them figure out where they can save and so forth. And that's one of the things that we talk about. Sometimes we just gotta buy a loaf of bread, buy some lunch meat, pack a lunch to work every day. That's just what we have to do. So factors that affect your credit score: paying your debts in a timely manner. I'm going to let let's see, who wants to help? Ben, you want to do this screen?
Sure. Factors that affect your credit score. Number one thing is paying your debts in a timely manner. You just do what you're supposed to, and it helps improve your credit score. You miss a payment, you're penalized way worse than you're rewarded for making a payment on time. Keeping your account balances low compared to your approved credit limits, especially on revolving cards, Visas, MasterCards, store cards. You want to be at 50% or less. You really want to be at 20% or less. A longer credit history can increase your scores. If you got credit going back to 2010 versus somebody got credit going back to 2020, all things being equal, the person with the more depth or older credit will have a higher score. Good management of revolving debt. I already kind of got ahead of myself and talked about that. And that's all your cards added together, not just one card with a low balance, but they're going to add all your revolving credit balances together, and then make that and if you're half or higher, it's going to hurt your score. If you're half or lower, it's going to help your score. Opening new credit accounts or credit inquiries can negatively affect your credit score. Auto dealerships are famous for inquiring. You're going to buy a car and they pull your credit 8 times on the same day. That's not a good thing. But those are factors that can affect your credit score, and your credit score is important.
Great, thank you. So we don't, I had this conversation recently with someone about, I'm going to just pay all this stuff off, and I don't know that that's always the best method. I like people to have more money in the bank and assets. But then I've had other customers that are like, I'm going to pay it off and I'm going to close the account. And we don't want to close the account, because the longer history that you have with the account, the better, because history has a way of repeating itself, and the best predictor of the future is the past. So we want to show and establish long-term. I love this credit wheel. I just love this because the payment history is so important. I think sometimes people think, well, I only have one thing late, or I only pay a couple things late here or there, and it's a huge impact. And the late pays stay on there. They don't go away. So the late pays stay, and we just can't stress that enough. Pay things on time. Sometimes the first conversations that I have with people is when I'm telling them to, get everything current. If they have anything in the rears that's not current, then the thing that I tell them to do first is do that. Do you know what's on your credit report? Do you check them annually? So if you want to take a picture of this for later use, this will allow you to be able to go to ftc.gov, and I think it's one time a year, Anthony. I'm not sure if we remember exactly, but you can check this and know if your report is reporting accurately. I love being able to utilize this. How much money do I need for down payment? So over the summer, I was doing a presentation for community and schools of the Dallas region. They have about 15 or 16 school districts, and we are the preferred lender for communities and schools. Our team is the preferred lender for communities and schools of the Dallas region. And when I was doing this presentation, one of the questions that I asked the whole group was, what is the minimum down payment for a conventional loan? And 70% of the room, or thereabouts, said that the minimum down payment for a conventional loan was 20%. And I was shocked by that, because that's not the case. If you're a first-time home buyer, you have the ability to do the minimum down payment for a conventional loan, which is 3%. A majority of conventional loans, if you're not a first-time home buyer, will be 5%, but you can put down a 3% on a conventional loan. And I was kind of surprised and taken aback when people don't realize that. And I think sometimes it's just news, it's kind of a misnomer. So I think sometimes what holds people back from home ownership or purchasing is because they think, there's no way I'm ever going to have 20%. And that again, it's just not the case. FHA stands for Federal Housing Administration. An FHA loan is an attractive loan, requires 3.5% down. That loan sometimes is a situation where maybe somebody doesn't have a 700 plus credit score, Or maybe they did have a late pay here or there, and a bump in the road. Maybe they've had a death in the family or divorce or something like that. So maybe their credit isn't just picture perfect, but that they can still qualify for a mortgage loan. Again, I talked about a veteran loan earlier. And on a veteran loan, it's a 0% down payment. It's for qualified veterans. We get your DD 214s and we will order your certificate of eligibility. Right now, Kelly and I today, we're working on a loan for a survivor benefit VA loan. She was married to a veteran. He passed away in the Army. He passed away. He got an illness while he was in the Army, got out of the Army, and then he passed away. She is a survivor, and we can do a survivor VA benefit loan. USDA is more for rural areas. So I've been doing mortgage now for 20 some years. Steve will probably laugh at this, but I remember when Weatherford was considered rural in USDA, right? Now you can't do USDA in Weatherford, but you can still do USDA or rural in Sherman. Sherman's still considered it. And what we do on USDA, and Anthony, if you'll put that, I think that's you're typing it in, but you can always check an area to determine it on the USDA website, determine if it's considered rural. We like rural USDA loans because again, it's 100% financing. And then we work with maybe you qualify for assistance. So, maybe we can get a seller contribution as far as like cash to close, closing costs and such like that. Any questions so far? I can't see the chat. So are we good? So closing costs and prepaids. I have this conversation a lot with people, and what they want to know is, okay, well, how, not just my down payment, but what do I do with the closing costs? Who pays the closing costs? So a year ago, even 2 years ago, there was no such thing as seller contribution, man. You just couldn't, you were in a situation where it was definitely a bidding war and sellers weren't willing to pay for certain things. Now that's kind of turned. And with the realtors that are on the call, I don't know if you'll give me that nod, but it's kind of turned where the seller is more willing. They're not having 100 people look at a house. So they're more willing to pay for a title policy, a survey, or maybe we use the existing survey that they have. Or maybe they're willing to provide some type of contribution towards, because, maybe it's not the best carpet, or maybe it's not this or that. And we don't want to talk about it in terms of like in lieu of repairs, but maybe there are minor things that you want them to do. And instead of them doing those minor things that don't impact the value, maybe they're willing to give a seller contribution. So cost can be paid in 3 ways. The borrower pays the cost, the lender can pay the cost sometimes, and the seller can pay the cost. Closing costs can consist of the closing fee, which is the title escrow fee. When the title company, we go and we get under contract, you go, you look at a property, you make an offer, then you end up in an executed contract, and that executed contract is then completed, but goes to a title company. In Texas, we do everything with title companies. And then at the title company charges a fee for their services. And the title company is responsible to make sure that you have a title commitment, that you have fair, clear title without a cloud on it, and insured title for the property, that you own it, that nobody can come to your door and say, hey, I used to own a piece of this property 20 years ago, or so forth and so on. So you have clear title. Other closing costs are appraisal. We get an appraiser to go out to make sure that they I hear something in the background. Do you guys hear that? You guys hear it?
It's gone now.
Okay. So recording fees. We record the deed, we record everything with the county. We have to make sure that you have homeowners insurance. Homeowners and hazard insurance is the same thing. You might hear that. You might hear somebody go, what's hazard insurance? Homeowners insurance and hazard insurance is the same thing. You have to have homeowners insurance in case of fire, tornado, some of those things that could happen along the way. Escrow, when we escrow property taxes and insurance, you're going to have an escrow account and your payment, principal, interest, taxes, and insurance. You're going to have an escrow account if you don't have 20% down. If you put down 20%, you can waive the escrows. I would say, and I don't know what the other loan officers' opinions are, but most of my customers escrow. And daily interest. Again, you'll do home inspections. I think every realtor on here would suggest you get a home inspection for a property before you purchase it, so you know if there's anything you need to know prior to. Any questions?
Is the home inspection and appraisal the same thing?
So the home inspection is to determine if a property, what maybe what repairs might need to, that's a great question. Who asked that? Javita, did you ask that?
Yes.
Who asked that? Okay, hey, how are you? So the home inspection is to determine the health of the house. So that's its own thing. You do that, you pay that outside of closing directly to the inspector. The appraiser appraises
the
the
value.
value
Okay,
of the
I got
house.
it. I got it now. Thank you.
You're welcome. So in most cases, the home inspection for the property and the appraisal should look pretty good, right? So if we know in advance, like if you've gotten an inspection and there's rotted wood, these realtors on the call, they know this. If you've got rotted wood or something, then we don't want to send the appraiser because the appraiser might point that out, right? So but we want a good inspection, because a good inspection or a decent inspection will lead to a good property value. So where will the money come from to purchase your home? So this is always the big question, right? So where will the money come from? Checking and savings, where we've saved money, put money away, the rainy day fund, gift funds. So gift funds, I saw Brian smiling there. Gift funds, come on. So gift funds are when you have, let's say you have a family member or someone that wants to gift funds, you're allowed gift funds in a transaction. I've even had somebody's employer gift funds for someone to purchase a home. That's become more prominent lately because employers, if they've got good employees, they want good employees to be homeowners. So 401k. So 401k loan or just a 401k, some of you will have a 401k that is managed. Let's say it's managed by Fidelity. What you do is you go into that 401k account and you look up what are the terms of withdrawal on your 401k account. And sometimes you can just get a loan against the 401k for a period of time, 90 days, 6 months without penalty. And sometimes on terms of withdrawal on a 401k, the terms of withdrawal is like hardship, or the terms of withdrawal in terms of if you're purchasing a home to be a homeowner, that's considered a hardship or terms of withdrawal. So we like 401ks, and we also will put a 401k in a loan just to show that you have reserves. Again, underwriting, we use underwriters to underwrite people to be able to purchase a home. And underwriters love assets and reserves. Even if we're not using it towards the down payment, they like to see reserves, because then they're like, okay, if something happens, do they have enough to make their first 2 payments? If something happens, do they have enough to make the next 3 payments? Just outside of that employment that they have. Cash value of life insurance. So I had a customer recently, and she was trying to put her money together, and she was talking to her parents, and they didn't have any money to gift her, but they said, we have this small life insurance that we got when you were a baby, let's look at it. And so sure enough, they had a small life insurance policy. I think it was worth $5,000. It hadn't accrued. It was one of those that hadn't accrued. I'm not an insurance professional, but it hadn't gotten any more value over time. It was just something that they got when she was a baby. And so they had this life insurance policy that had a cash value to it, and they gave it to her, and she cashed that in. And so sometimes people have that. They have some life insurance policies that have been in the family for many years, and they have the ability to cash them in on the cash value to use that cash towards down payment. We love down payment assistant programs. Our whole team uses them. The one that we like the best is the Texas State Affordable Housing Corporation, TS. It's pronounced TSHAC, even though don't all the teachers on here, don't give me that look. But that's how it's pronounced. And with that program, I know that Anthony put in the chat that website. You can go to that website and look around. It'll also lead you to the Texas Financial Toolbox, which is a great thing. But on that website, there's an eligibility quiz, and you can take that eligibility quiz and just enter some information to see if you qualify for grant assistance. And it's just money. It's money to be able to put towards your down payment. It won't cover everything. There, you have to have skin in the game. The most common question that I ask everyone when we're first starting the process, I ask this question, I say it every day: how much of your own money, are you planning to use towards a purchase of a home? And if we're only talking about a couple $100s, it's going to be difficult to purchase a home because you got to have some skin in the game. You don't have to have all the skin in the game, but you got to have some skin in the game. We love these programs, TSHAC, TDHCA, and Seth. We like these programs because it is a hand up into the process. It's not a handout, but it's a hand up into the process so that you can be able to own a home. Sales of personal property. I don't know if how many of you might actually have maybe a wife or a spouse that might have bought something that they don't actually need, maybe a third boat or maybe a motorcycle. Just saying, no one's done that in my family, but maybe they've bought something they don't actually need. And if they've sold that personal property, as long as you have a bill of sale and we prove that you actually originally owned it, you have a bill of sale, you can use the money from the sale of that personal property towards the purchase of a home. So if you're looking around in the garage and you got that, old car, I don't know, what's that show, Ben, that we watch that the guys go around? What's that show?
The Pickers, American Pickers.
Yes. How many people have seen the show American Pickers? Y'all have got to see this show. That is the greatest show ever. It creeps me out a little bit, but that is a great show. American Pickers. I love that show. And they find some really crazy finds that I would think would be no value at all, but are very valuable. Employer assistance programs. I'm amazed at the amount of employers have assistant programs and people don't know about it. And they don't know about it because the HR department doesn't tell you in your benefits, or they don't really mention it. It's kind of in the handbook on, page 75, so look into it. It's not, you can't, there's no reason, there's no harm in asking a question to an employer. Hey, I want to be a homeowner. I love my job. I want to stay in the area. Is there any employer assistant programs? And if your employer says there's not one, but we should have one, then have them call me. I've got an outline for it. And I'll help them out. We can use the same program that we used for communities and schools. So what do we all do in January? What's the next thing? What do we all file in January? Don't all jump at once. Taxes. Yes. Thanks, Steve. That we file our taxes. And so that is what the tax, tax refund. A lot of times when people file their IRS tax refund, they can take that, put that in the savings, and we can use that money immediately towards your down payment because we can show you filed your taxes, it's the same amount that you deposited. Someone had a question in the chat. I can't see the chat, Anthony, but I know someone had a question.
Yeah, so the question is from Angela. She says, why pay interest on escrow? And so I think there is just a little bit of confusion about escrow. And I'll try to break it down. So first of all, you get to shop for your homeowner's insurance no matter what. We might have some recommendations for you, but whoever you have your auto with, a lot of times you can get homeowners through them. But you never pay interest on what goes in the escrow account. Your escrow account is basically just a holding place. It's part of your payment. And at the end of the year, the mortgage company that has the escrow account, they'll pay your insurance and your taxes for you. Does that clarify, Angela?
A little,
think-
okay.
I think the better way to tell her is they control your money and pay your bill instead of you paying it directly.
That works too. Yep.
Ken, I
And
saw that you,
and
go ahead, Ben, sorry.
well, the good thing about with an escrow account, you don't have to manage it. It's 1/12 of your month of your annual taxes and insurance each month added to your payment. If they make a mistake and pay your taxes late, you're not penalized for that. The servicer is on the hook for that. And if you don't escrow, if you can manage your money that way, that's great. But if your taxes are $5,000, it's never fun to get a $5,000 tax bill, because it shows up right around Christmas time, a little bit before. I'm already spending much money over Christmas, so you pay one payment and you forget about it, and it's kind of like on automatic. If there are some advantages to not escrowing, but especially for first-time home buyers, I'd recommend escrowing. That's my 2 cents on escrows.
It's part of your actual payment, Angela, and then I'm gonna show PITI here in just a second. Ben spends too much time at Christmas because he has a high maintenance wife, just saying. So, totally kidding. Second job. So I always talk to people about second jobs. We can't count a second job as income, but you could certainly use the assets created from a second job towards the purchase of a home. And a lot of times this time of year, people trying to catch up from the holiday, there's just avenues around being able to maybe have, I call it the side hustle, 10 hours a week, whatever, somewhere. Then mortgage credit certificate. Mortgage credit certificate is not towards a down payment, but I definitely wanted to mention a mortgage credit certificate, because if you are a first-time home buyer, a mortgage credit certificate allows you to have a tax liability, tax deduction, if you will, or a tax credit for the time that you own the home. And in some cases, that tax credit is as much as $2,000. So when you can have an additional tax credit along with the deduction of your interest and your property taxes, I just wanted to mention it to you. You can always Google that. And then also on that TSHAC website, you can hear him talk a little bit more about mortgage credit certificate. The reason why I mention it is that when you purchase a home, you may be able to change your W-4 so that your take-home pay is more. And if you have a mortgage credit certificate, that is definitely because of that too. So we know we utilize them all the time. I always double check if people qualify for a mortgage credit certificate, even if they don't know anything about it. I recently went to a closing with Rebecca McMahon. I don't know if she's on the call, but I went to a closing and I sat at the closing and told him, at the closing, you have a mortgage credit certificate. You're going to get it in the mail. He had no idea. Well, I double checked and he qualified for it, even though he had gift funds, even though he utilized gift funds for his down payment, and he wasn't using a down payment assistance program. He had 20% down payment. He still qualified for a mortgage credit certificate. How much can I afford? This is always the big question. How much can I afford? So here's your debt to income analysis. And again, this may not be your household math. So with respect to that, let me just say that we understand everybody's math is different, but this is what a debt to income analysis is. Your total monthly debt divided by your gross, not your net, your gross monthly income. So combined monthly income. So let's say your combined household income, husband and wife, your combined household income is $8,000. So 45% of that, of $8,000, would be $3,600. So let's say you have monthly obligated debt and credit card debt of $200 a month. Maybe you have a car payment that's $300. I haven't seen a car payment lately for $300, but most of them are a little bit higher. Student loan debt of $400, and your total monthly debt is $900. And let me say this, the better your payment history is, the better your credit card interest rates are, and the lower your monthly obligated debt. And as a lender, all we care about is your monthly obligated debt. So, and I'm just going to use this as an example. So like Philip, the loan officer Philip, might have a credit card that he owes $2,000 on, and I might have a credit card that I owe $2,000 on. His monthly obligated debt might be $50. My monthly obligated debt on that card might be $150. So which one of us would have the higher monthly obligated debt? Me.
You.
Yes, me, because and again, that would be what we're not looking at the balances. So he might have a balance that's a higher balance, but a lower monthly obligated debt. So we're looking at that. Now you might pay more, like you might decide that you're going to pay more on that monthly obligated debt. That's fine. But we're only going to look on the credit report for what you're obligated to pay monthly. And so in this example, the total debt, $900 monthly. Monthly debt allowed for 45% is $3,600. So minus that $900, your amount allowed for housing in that example would be $2,700. Now, I will tell you that we have done conventional loans where the debt to income ratio was more than 45%. We just got an approved eligible on something where it's 49%. But as a general rule, we would prefer that the debt to income ratio be 45% or less. Veteran loans, VA loans, we've done veteran and VA loans where the debt to income ratio is as much as 55%. So there are some exceptions to the rule, where 46.3 will work. But again, just for simple math to show you this, not to knock you out of the water and freak you out, but just to be able to show you this screen and just be able to understand the housing piece. We look at debt to income ratio, and we also look at what's called a front ratio. And a front ratio is a housing ratio. So a housing ratio is exactly what it is. Like exactly, and I don't know if Ben, you want to explain housing ratio, because we've had some loans lately where people are not understanding why they don't qualify.
Well, your housing ratio is just it's your house payment divided by your gross monthly income. So if like in this case, I've got to do the math. It's 2,700. Oh, that's $2,700. It would be like if your payment was 1,800. Divided it by 8,000, that would be so that's your front ratio. So it'd be like 41 over 45 maybe, or whatever. But your front ratio can be too high. I've had loans where the front ratio, if you have no debt, your housing ratio and your debt to income ratio are the same. So and that can happen, and it'd be an approved loan. But a housing ratio, I'd say above 45% can be problematic.
Okay. Any
I don't know if I
questions?
explained it.
You did good. Any questions? Okay, what's included in my monthly payment? This, Angela, will help a little bit. The principal, which is the amount borrowed to buy your house. So the principal, you hear it all the time, PITI. So principal amount borrowed, that payment goes towards the house. The interest is the percentage of principal based on the interest rate. So the better the credit, the better the interest rate in most cases. That payment goes to the bank. Taxes, gotta pay our taxes, right? My dad used to say, all we got to do is die and pay taxes, right? So taxes go towards the entity billing the taxes, the county, the property taxes. That taxes will go in the escrow account. Your homeowner's insurance will go in there, and then that will be paid out of the escrow account to the servicer of the loan, and also the property taxes will go to the government tax office. The only other thing I want to add on this is, again, if you don't have 20% down payment, you'll have a principal, an interest, taxes, insurance, and then what is called mortgage insurance premium. You might hear it as PMI or MIP. It means the same thing. So mortgage insurance premium is an additional small amount that protects the lender should you default when you don't have 20% equity on a loan. Sorry, went the wrong way. How do I get started? So Well, the best way we always say to get started is you have to complete a loan application. All the loan officers on this call, you're going to get all the information at the end. We cover Texas, Louisiana, Oklahoma. We got someone about to be licensed in Colorado, Florida. So, you know, our team primarily does loans in Texas. So, but we do those other areas as well. And you know, if we can't, we got to look at it. So if we can look at it, then we know what to advise you on. And some of the items that we're going to ask for is we might ask for a current pay stub. We want to be able to see what your year-to-date earnings are. We may ask for 2 years tax returns, especially if you're self-employed. We do self-employed loans all the time. I worked on 2 self-employed loans today. It's not a big deal, but we do look at that. So we like to have 2 years tax returns so that we can do an income average over the course of 2 years. We get 2 years W-2s. We may get a 1099. Obviously, if you're a 1099 wage earner, we get a copy of your photo ID. It can be a passport or a driver's license. It cannot be expired. Ooh, I tell you. So people showing up to closing with an expired driver's license. That is not, we don't like that. So it has to be current. We have started loans where we are able to see that during the COVID era, I know we're kind of still in that, but you know, I know that the driver's license office were closed and people had expired license. And I heard a lot of people say, well, I can't get my license renewed because of COVID. And I'm looking at their license and it's been expired for 5 years. So come on, you know, so we gotta get on the program. We gotta have a current non-expired license. The most recent 2 months asset statements for all accounts using to qualify. So 60 days. So if in fact you're gonna have some big lump sum of something, we have to source all large deposits. So if you had some strange large deposit because you went to WinStar and you won like $10,000 or whatever it was, you're my friend. You're definitely my friend. I see you smiling, Brian. You're definitely my friend. So when you deposit large sums of money or large cash, we have to source it. So we like that money to be seasoned. My chair keeps rolling, y'all. I'm sorry. And even if we look at a bank account that we're not using to source for assets, we'll still have 60 days. We do a Premier, Nationwide Lending does a Premier Express program where if we have automated, we use automated systems. So Kelly looked at a loan today and we had an approval in like 20 minutes because it worked out. Like they were an automated employer. They completed the account check. They had the assets. And so we were able to do that. The other thing is sometimes, not always, but sometimes when people put down 20%, we've got a couple loans right now where we're stipulating to the value. So we don't have to have an appraisal. That only really happens when it's 20% down, but we have that Premier Express program. So it's very quick through underwriting and closing and whatnot. Okay, so here's a caution. Caution. These are things that people sometimes will make a mistake and do during the loan process, and we don't want this to happen, and it can affect your ability to remain qualified. Change employment. So Kelly Campbell's giving you the look because as an admin operations person, she has had to break the news, you know, change employment, significantly increase credit card balances. Oh, I'm getting a house. I'm going to go buy this or that. Reduce asset balances, you know, for whatever reason. Fail to disclose all debt. Here's the thing. If you have a debt that you owe someone and it's not on the credit report, but we can see the debt in the bank account, you know, like on your credit report, if you owe the IRS money, it's not going to show up on the credit report, but it will show up somewhere else and we're going to know. So you just tell us, you know, we're here to help. Apply for new credit. You don't want to do that in the middle. I was closing on a build deal recently and she signed, I went to closing, we went to lunch, and while we were at lunch, I got a phone call. And the night before she was at the mall, went to Victoria's Secret and applied for a credit card. So that we got an alert. And, when we get an alert, if you apply for a credit card, then we're going to get an alert. And we've got to know what kind of credit or how much you owe. We have to have complete understanding of the debt. You don't want to have large undocumented deposits. So I was a week from closing, and this couple, the father-in-law decided to send them some money and deposit it directly into their account to help them with the house, even though they didn't have, wasn't aware of gifted funds. So I got the last statement right before I'm clearing to close, and the last statement showed a large deposit, foreign wire transfer from Colombia. That was an exciting thing. That was an exciting thing to solve, so we don't want that. If you don't want to change banks, you don't want to move money around too much. Like, I was doing a loan for a couple of sisters and they moved money all the time. So if we can prevent that. And the last thing is, when you're in the middle of trying to qualify for a mortgage loan, please don't co-sign a car for your kid or anything else like that. It's not a great idea. Having your own realtor is so important. I can't say this enough. We want to stay in the lending lane. We do not want to be in the real estate lane. So anybody that calls me and they go, I went and looked at this house, what do you think? I'm going to say, what did Steve think? What did Rhonda think? Anybody else that's on here, that's what I'm going to say. I'm going to say, what did they think? So some of these examples that are important things for your realtor, that they do, I'm just going to ask, Steve to cover two of these, the first two things. What do you think?
Yeah, so a realtor has, I guess, more access to better tools and more tools than your average person on this call. And so we can help you find that perfect home by having having a consultative conversation with you to understand what you're looking for in terms of rooms, bathrooms, location, that kind of thing. And we can narrow it down after talking with somebody like Stacy about how much you can afford, and we can get you, a list and the school information, etc. Especially as a first-time home buyer, you don't want to do this alone. I mean, there's so many ways you can be taken advantage of by sellers. It's just not nice. Explain each part of the contract. The contract is, wow, they just changed it. They just updated effective February 1st. I think the contract now is like 8 or 9 pages. And to walk through that on your own without having a licensed real estate agent in your corner, explaining to you what each one of those, each one of the lines and each one of the sections is all about, is just, it'll make your head spin. Makes my head spin sometimes when I go through it.
So one of the things that I always say is, you wouldn't go into a courtroom or you shouldn't go into a courtroom and not have representation. This is a executed binding contract. So you need someone licensed to represent you. Also, as loan officers, all the loan officers that are on this call and on our team, we're all licensed. So we follow guidelines. We're licensed, and we're going to give you our best advice that's best for you because we're licensed. And I don't know about you guys, but I don't know what else. Maybe I could be a Walmart greeter, but I don't think I would be very good. So this is what I know how to do, so we don't want to change this is our passion and our careers. We don't want to change it. So Rhonda, is there anything on there? I'm sorry, I've toggled past it here. Is there anything in the other two that you want to mention?
I just concur with Steve, but also anything, just having someone to help you walk through and talk through, like even just the layout of the house versus what you're wanting, and helping you stay focused on your goals so that you don't wind up getting sidetracked by, oh, this has this, but I don't even need that. It just seemed pretty at the time, but now you're still missing something that was on your must-have list because you got sidetracked. I mean, those are just some things that we can help you do and help you track back. And, you know, you love this house, but it's 2 hours commute. I mean, you know, things like that just to help you find your way to where the house that ticks the most boxes possible. And then also helping you to walk through the inspection and that process and being there for those types of things as well.
Perfect. You could raise your hand. I can't see the whole gallery, so I don't know what other realtors I have on the call, but I will say this. I think what's great about having a real estate agent is that they take the emotion out of it for you. Like, it's an emotional thing. It's an emotional thing when a seller sales. It's an emotional thing when we purchase. And we do look at things, bells and whistles, and sometimes with a realtor, this is a business, right? So they're taking the emotion out of it. They're going to schedule and guide you through the home inspection. They're going to let you know on the home inspection, is this really a big deal or not? You know, as far as what the repair is. They are also licensed, so they don't want you to buy just for the sake of buying. They're going to negotiate and present the offer. Hey, Ivan, how are you? They're going to communicate with the seller's agent and the title company to schedule your loan closing. So those are the kinds of things that they're going to do for you. Ivan, did you have any input?
Yeah, I just wanted to mention now that we also can ask for concessions to help you cover some of those closing costs or get you something as the buyer. And this is the perfect time that we can actually ask for those items due to this,
Yes.
you know, price, you know, market.
Absolutely. So from contract to closing, you're looking at property, you get a purchase contract. We're going to provide what's called initial loan disclosures after we've got an executed contract. Then we're going to look at locking a rate. Sometimes we lock at the beginning, sometimes we wait a little bit. That loan then is packaged and we send it to processing and underwriting. And while it's cooking, as I like to say, while it's cooking in those areas, we order title, we get your homeowners or hazard insurance set up, we order an appraisal for value, and then the qualification. After they're qualified, the underwriter has signed off on it, and we get to the end of the process. Then we're going to get a closing disclosure to you at the end. And then there's a 3 business days. So if we send a closing disclosure for you on Tuesday and you sign it, then we can close on a Friday. So there's the little 3, it's called TRID. There's a 3-day business time there. Then there's closing day. Closing day requires your attendance. A lot of times we go to set up closing and like, I can't do it that day. I work that day. Yes, we know. So the title companies work during the day too, like your doctor or your dentist or whatever. So you have to attend closing. Michelle is laughing. I love it, Michelle. This is good. You're laughing. But yes, you have to show up, sign your documents. Those documents are going to be notarized. In most cases, your realtor, and if you're on our team, we try to be at our closings and attend our closings. So in case you have any questions, but the title professionals are at closing, and that's what they're there to do, is explain documents and run through all that kind of information for you. The one thing that I will say is that things evolve. So when we do initial closing disclosures, you're going to sign a bunch of documents, Fair Credit Reporting Act and Equal Credit Opportunity Act, and you won't ever see that document again till you're at the closing table. So sometimes it can feel a little bit overwhelming, and especially, like I said, it's, you don't do this every day. So we understand that. So we don't have any problems running through and explaining what each document is for. But a lot of times there is documents just for sake of documents. One other thing I want to say with my realtors on the call, and they can give me the nod. I know that we've become the age of internet, and everybody thinks they can do everything because the internet says that they can. But I think that Steve and Rhonda and Ivan and whoever else, Michelle, they will all agree that what you guys see on like Zillow is not real. Like sometimes it's not real. And that's why you need a professional that has access to information that y'all don't. And people are like, well, I found this on the internet, and sometimes it's just not real. That's why you need help. Everybody agree? Absolutely.
Agreed.
Zillow is April Folsom. She just said Zillow is horrible. So
They
yeah,
are.
so definitely. It's false advertising. So that's why you need help. Ken, you had something?
If you
I know we're
mentioned this, I
running tight.
apologize. But for the buyers out there, the best part
Oh.
about having an agent is the seller of the house pays your agent's commission. So there's zero reason not to have an agent. They do all that work for you and it doesn't cost you a dime because the seller pays for it.
That's so great. Sorry, Ken, I should have remembered that. But yeah, absolutely. So you're a buyer, you don't pay the real estate agent, the seller pays the commission on the real estate agent. They're there just to represent you. So thank you. And okay. So this, I did a podcast with T-Shack. This is about credit. So if y'all want to take a picture of this for later, this is a 30-minute podcast that you can listen to. And I just basically dig a little deeper, whereas on this call, I can't dig that deep on credit, but I dig a little deeper on that. Also, for the realtors that are on the call, in our Flower Mound office, if you're close to Flower Mound, we're going to do a credit education for realtors 2-hour CE class. If you will, in the chat, Anthony, if you'll put Kelly's email in the chat, then she can get them registered if you want to come. It's a small class. We're going to do that in the other areas, Spring and Pearland. We're going to do that same class in Lovekin, some other areas. We consider ourselves a leader in lending, and this is our team. And Premier Nationwide Lending, NTFN owns several mortgage companies. Premier is the flagship of those companies. But this is a picture of myself and Ben and Anthony. Philip was on the call. Ken was on the call. Denise was on the call. So you can take a picture of that if you want to reach out to anyone. We're all here to help. Anytime anybody does a loan application, even if they do a loan application on mine, and Anthony can give you that in the chat. It's StacyLynchReaver.com. Then we can direct the traffic. I move loans around, and we can direct the traffic for people to help and get that done. And I saw Anthony put something in the chat. I know that everybody's worried about interest rates. Marry the house and date the rate. You can be in a situation where you can get into a house and we can refinance it and make it more attractive later on, as the rates begin to fluctuate. In the 20 years, and my husband who's on here in the 30 years, and I'm sorry, he's so much older than me.
Not quite 30.
Okay. So in the time that he has been in the business and I've been in the business, the market has shifted so many times. So it evolves. And then this is information. We ask that you get on social media and follow us. Follow us on Facebook, Instagram, LinkedIn. Be our friend. Be your friend. Reach out to us. The last thing I want to share with you guys is that in the very beginning, I was talking about my parents. And my parents rented my childhood home for 19 years, as I talked about. And then I put them in a position where they could purchase a home. And when I put them in that position, and the first time in their whole marriage, and they bought the house that my mom still lives in here in Flower Mound, after the month they've been in the house, my dad was saying to me, like, hey, I think I'm going to do this. I think I'm going to paint this. I think I'm going to do that. And it was as if he was asking me for permission. And the reason is because I finally realized that he had asked for permission his entire adult life. And when I was a kid growing up in that house in Arlington, Texas, and I wanted to paint my room some funky color of pink, the landlord was telling him no. He didn't tell me that. He was telling me no. But what was happening was he couldn't get permission to do the things that he wanted to do because he was renting. And so by small assistance on my part, he was still in that mindset. And I remember looking at my dad straight in the face, and I remember saying, Dad, I don't care if you paint the damn thing pink. It's your house. It's your house. Paint the door, hang the pictures, whatever it is you want to do. It's your house. Their name was on the note. They're paying the note. And I tell you that story because it was myself that sat down and said, because Dad was like, you could buy this house. I was going to buy 2 houses. He was going to lease one for me. I was going to live in the other one. And I didn't want to be the kid that told my dad no. I was Dad's girl, right? But I sat down, and I would like to tell y'all we were sitting at church, but we were actually sitting in a bar. And I was sitting on a bar stool, and I was telling my dad, Dad, you can do this. You can do this. You can purchase this home. You can do it. I will help you, but you can do it. And so they got into the home, and I tell you that story to tell you this, that a few years later, I'm talking to him like I'm talking to you now, and 45 minutes later, he was gone. Like that. Wasn't sick. 61 years old. The closer to that age I get, the younger it seems. And that was about 17 years ago. Had I not convinced him to do it, my mom would not have a house that she now lives in and she owns in Flower Mound that has gone through the roof in value. And my mom is 82 years old, and in February she turns 83 years old. And if she comes to me right now and says, I'm done, I don't want to plant any more posies or anything like that, then she's got a ton of equity. We could sell it, and she would have plenty of money if she wanted to live in some other assisted care or anything like that. But we wouldn't even have that option had they not originally purchased the home. She would not have the equity. If they hadn't purchased a home and they were still renting, she might possibly be living with me. And I wouldn't be on this call because I would be crazy. Just gonna say, I love my mom, but there might be a crazy factor. So, but I share that story with y'all, and it's always meaningful when I share it, because that's what I want y'all to think about. I want to think about the fact that your kids are safer when they live and play in their own front yard and their own backyard. I want you to think about it from a long-term standpoint. If you keep waiting, what does the next 5 years look like? What does 10 years look like? Because they waited their whole marriage, and he only lived in that house for a few years when that happened. Happened on Father's Day weekend. I will never forget it, you know? So this is the time. If there was ever a time to step in and build equity in something, right now is that time. You're not going to be in the same competition, overwhelming competition that you were a couple of years ago. There's options and opportunities out there. So if you want, Kelly's email's in the chat. At the end of all the presentations that I do, either virtually or in person, I always say that my mom used to say that when I do presentations, she wanted to make sure I gave everybody flowers. And I'm like, Mom, I can't give everybody flowers. Oh no, you have to give everybody flowers. And I said, I can't do that. But what I figured out how to do is that I could give you seeds so you could plant your own flowers. So we have some bluebonnet seeds. You know, we like Texas bluebonnet. So we have some bluebonnet seeds. Kelly's got some too. So if you want some, we'll mail some to you. You just got to email her so she has an address to mail them to. And then I know we went over, and I hate going over time. I'm so sorry that we did, but I want to be able to answer any last questions that you might have. And then also Kelly is going to do a couple of door prizes. We probably have time to do 2. So pick the best 2 that you have, Kelly. Do you want to do the spinning wheel, or you want to show them what it is? It's kind of like, y'all aren't old enough. Maybe Steve's old enough. Monty Hall, right? Monty Hall, let's make a deal. Door number 1, door number 2.
Absolutely.
There you go. Oh, we see your lots of icons. Okay, here's the names on our Wheel of Fortune. So she's going to spin the wheel. And I know we have some very cool, these very cool water bottles, Premier water bottles. I'm told that it stores wine as well, but it's really supposed to be for water. And
Jovita Lamson, it looks like.
Javita?
Yes.
Yay! I'm a New Year winner.
Yes, yes.
Winner,
If you can just email me your mailing address, and I can go ahead and send that to you.
So water bottle, and then the second one.
Stacy, I have a question for you. Are you the lady I was working with in Duncanville about 3 years ago? You were showing me some townhomes.
I don't show homes. But I do work in Duncanville as far as like I've done loans there. But
This lady was working with me, and Deanna was the loan officer.
oh, okay. Deanna Adams. Okay.
Mhm.
Yes. She spends a lot of time in Oklahoma now, but she is out of our office here in Flower Mound too.
Okay.
But we're here to help either way. Michelle Chambers won the second one. Whoop whoop. So what did Michelle win? Bottle or the charging thing?
I'm gonna say the charging thing.
Okay. So
Bottle is gone.
yeah, so she's got a box that's got a little charger in it, a little Premier notebook. Look, she's showing it like she's Vanna there, you know. I love that. And then she'll send along with y'all's deal, she'll send some blue bonnets. And if you guys are in the Pearland area, Denise is there. Spring, Ken Melber, and Ken Melber is very good with second homes. He's so good with beach properties. For those that want, he does that. And so does Ben in Houston and also Flower Mound Market. And Michelle said thank you. And I'm trying to. And Anthony is licensed in Oklahoma, and he's also in lives in McKinney. And then I'm trying to think who else. Did I miss anybody? Phillips and Lovekin. Anything in East Texas? If it's got a pine tree, Phillips all about it. So, and he's also licensed in Louisiana. He's starting to make some really good traction there too. So, I know there were some questions in the chat. I saw another question pop up, but I can't read it. Anthony, no?
No, I think we're good.
Okay, I swear there was a question. It said, oh no, Sandra. Somebody raised their hand. Sandra, do you have a question?
Yes, ma'am.
Okay.
I want to know, are you too old to buy a house at 66? First time buyer.
Ma'am, that's a no, ma'am. And let me tell you something. I'm going to tell you a quick story. So I was at a closing, and his name is Billy. And when I was sitting at this closing, and it was a VA loan, and I'm going to get all emotional. I was sitting in this closing with him and his wife, and Karita Loftus was the realtor. And I was sitting at the closing, and he was using his VA loan, and he was in his 80s. And when we were signing the papers, he stopped signing, and he said, I don't really want to tell you your job, but I don't know that I'm going to live another 30 years. This says a 30-year fixed. So what's going to happen if I don't live 30 years? And I'm like, no, sir, we can't, it's equal credit opportunity. We can't judge. We don't know. We can't judge based on age. So I just told you, Sandra, my dad was 61 years old, and he had just purchased a couple years before at 58 for the first time his whole life. So we cannot judge based on age. And I will tell you this, if anybody is going to outlive all of us, it's going to be my mom. So she's going to live another 30 years, absolutely. If we're not the only purpose to make oatmeal raisin cookies for my husband. So just for the record. So yes, we cannot judge. So you can buy a house at 66, 67, 70, 80. And as long as we can show that you have the ability to repay some type of income, maybe it's retirement income, Social Security income, those incomes count. Any of those incomes count. That's a great question.
I've had several customers over the years in their late 70s, early 80s do a 30-year fixed because their goal was they wanted their payment as low as possible to give them more money to spend. And they said, I'm not going to pay this house off. It's my kids' problems when I die. So they did 30-year fixed to keep their payment low, and they were in their 70s and 80s.
Yeah, I love that, Sandra. I love that. Anything else? I don't see any more hand raised.
Stacey, I have a question.
Yes, sir.
How far ahead, like if we know our rental lease is going to be up in July or August, how far ahead do we need to start the process? And do we start with finding a loan officer? Or do we start with finding a realtor?
Well, first of all, you have found your loan officer, no doubt. So let's make clear on that. But what I always said is that I believe that we should look sooner than later. And when I say look, when we run credit, our credit is good for 120 days. We don't have to run credit again. So if your lease is up in like July, you could probably wait a month and we could check it out. If you have any doubt about what that credit looks like, now is better than later, because then we can tweak it and we can do some stuff. I worked with a guy that was a police officer. He'd gone through a divorce. His name was Al Deal. Can you imagine Deal? Like that's a police officer name. Here, I'll make you a deal. It's kind of funny. But I love that guy. And I asked him if I could tell his story. And he and I worked together for 2.5 years. In the 2.5 years, we were at the closing table. And so sometimes if you have any doubt about what's on your credit or anything like that, then sooner than later. Now, I will say this. If you buy a house and you close in, let's say you close in May, your first payment isn't until July 1st. If you close in June, your first payment isn't until August 1st. So sometimes people will time it, where they have enough time. Give yourself a month window to move, that I always tell, because maybe you want to paint something and you don't want to move in immediately. You want to clean it or paint it or something like that. So that's a really good question, Brian, for sure. So
Okay.
sooner than later. In your case, you probably wait a month, something like that. So Brian, I'm gonna point out Philip's brother-in-law is Jake Crawford, and Jake Crawford is the guy that had the carpenter that sent to your mom's house and to fix the steps.
Thanks,
So
Philip.
I was having a full circle moment there for a second. I just thought it was really cool. So
Yeah, I know. I
and-
know. Mandy and I are like terrified. We've never owned a home. Similar to you, like my family had never purchased a home until just a handful of years before my father passed away. So like I have no idea how to do it. I'm terrified, afraid I'm gonna make a mistake. Even once we do, I know that just putting not using 3M command strips and putting the nail in the wall, I'm gonna be terrified that I'm gonna be in trouble. So I totally understand some of those stories.
Yeah, I get it. I totally get it. And the thing is that we all have a personal story that we can kind of lean into. Ben's personal story is his parents, he doesn't know a life without home ownership. But what he knows about home ownership is how it didn't always start off as good as it is now. His dad owns like 100 acres and but that's not how it started. But that's his story. So he's seen them build equity over time to get it to the point of what they have now. I don't know if I didn't mean to tell
A
your
bunch of
story.
VA loans. I was raised by a couple veterans, and everywhere we lived, they bought a house, and every house got a little bit bigger. The family got bigger, and he has a 100-acre place in East Texas now that is paid off, and if he needed a reverse mortgage or something to live on, he's got plenty of equity there. But we always bought a house everywhere we moved, and it was, you didn't notice it as a kid, but what I didn't know is each one was where the asset got bigger and bigger and bigger. The quickest, easiest way to build wealth in this country is to purchase a home. You're going to be paying rent anyway. You might as well be paying your own rent instead of somebody else's.
True, Ben.
Amen. And there were a couple questions in here on the assistance. If you have used down payment assistance before, and then maybe you're selling or whatever, I've had customers that have used down payment assistance several times. You don't have to be a first-time home buyer to use the down payment assistance. Now, with the down payment assistance program, you do have to have a 620 credit score or better. Debt to income ratio has to be reasonable. You have to have an approved loan. And then you qualify, from that point, you qualify based on the income for the county that you're purchasing. So the Dallas-Fort Worth counties, if you make, it's like, I think the income limit now, and Anthony could correct me, but I think the income limit in the area around here now is like $118,000 a year for the T-Shack one. If you go on that T-Shack website and you plug in eligibility, it's going to ask you where you want to live, and they're going to take that information to determine the county based on your income. So, there's a lot of ways to qualify for the assistance programs if you need it and you want it. But if you've done it before, you can still do it again. If you've sold that house, you can still do it again. So I saw that question on there, but I didn't know who asked it. So I know we've gone way over. This has been an awesome class. I just love it. I love that this was the best class we've done in months. I think it's a new year, a new you. New year, new you, new opportunities. So I think it's just been an awesome class, and I'm so grateful everybody got on the call, and even people I'm related to are on this call. This is awesome. So anyway, if you've got any questions, let me know, and reach out. Like I said, you've got Kelly. Did you put my stuff in the chat too? Yeah, Anthony put my stuff in the chat.
Yes.
So
Put your YouTube
we're
channel
thumbs
on
up
and
to
everything.
y'all. Thumbs up to everybody on the call. And again, you've got the screen here. Is the PowerPoint still up or no?
No.
Here, I will put this screen up one last time so that everybody can see. If there's someone, can you see it now?
Yes.
Okay, so you got that. When we do the spinning wheel, it comes down. So, but you've got that. So if you have questions, let me know. You're welcome, Angela, April, Brian. I see. I'm now able to see the chat. So, Sydney, everybody. So y'all have. I'm on the chat if everybody's got everything that they need. Also, we record these calls and then we put them on YouTube. So if you want to go back and reference it, you can look up Stacey Lynn Mortgage. It's free. It's a free subscribe. You can go on there and you'll see some of the other classes that we've had that are similar to this too. We kind of change them up a little bit. All right. Whoop, whoop. Happy New Year, everybody. Bye.
Bye.
Bye. Happy New Year.
Ooh, wait, I should have taken a picture. Forgot.
Hurry, hurry.
I know. Dang, I forgot to take a selfie. There we go. Okay, bye, y'all.
All right, out.